And what we want to talk about is auto exercise and assignment, the basic concepts on in-the-money options exercise or assignment at or before expiration. Now, this is a direct response from Sal. Sal wrote to me and said, in talking to an ETrade rep, I became confused about auto exercise and assignment. So we go through expiration, our option is in the money, whether we bought it, it's usually going to be automatically exercised, or if we've sold a put, for example, that's now in the money, we're heading towards expiration, we can expect to be assigned if we don't roll or manage that position. But as an example, the statement was made related to a specific cash secured put position. And the rep at ETrade said, options auto exercise strictly on the long side, but not always and or necessarily on the short. On the short side, the OCC does not auto exercise ITM shorts. Well, I don't know if I agree with that, but we're gonna nail that down. It says, so it is possible that on a deep in-the-money short put, the position might in fact expire untriggered, i.e. unassigned, and therefore worthless. As Sal says, I'd be grateful for a deeper understanding if there's a way to determine the probability of the options underlying being or not being randomly assigned at expiration based on outstanding contracts or other data. And he says, this is the specific outstanding trade that has been rolled over several times. He's got 10 contracts of a put sold on AVDL for the 10 strike, but it's all the way out to January 2023. But the stock's at $5. He's technically 50% in the money. Now, directly from the horse's mouth, from the OIC, and I'm not going to read all of this, but I'm just going to go over the finer points. This website they have here, optionseducation.org, reference library FAQ, options assignment. You can check that out. They have several bullet points here about options assignment and exercise. And they start off with, you can never tell when you're going to be assigned. And once you sell an option, American style, you have the potential of assignment, fulfill your obligation, or deliver shares of stock on any business day. To go on, it says, to ensure fairness in the distribution of equity and index options, OCC utilizes a random procedure to assign exercise notices to clearing member accounts maintained with the OCC. The assigned firm must then use exchange-approved method, yada, yada. Here are the important bullet points for this particular FAQ. Option holders typically exercise only about 7% of the options. And that hasn't changed much over the years. Only 7% of the time the options will get exercised. The majority of option exercises occurs as you get closer to expiration. You wouldn't be worried about your January 2023 put necessarily right now. So it's usually much further or much closer, when you get to that expiration date. And in general terms, an investor is more likely to exercise a put that goes in the money than a call. And they go on to explain that think of the result of an exercise. If I own the long put, most likely it's in a married put position, protecting my stock. I want to exercise it because I'm going to get money back. I'm going to get that stock price back for exercising the put. Exercise the call, I have to pay to buy the stock. And of course, they do say here the bottom line is you don't have a surefire way to predict when you will be assigned on a short option position. It could be in any day. The stock market is open for trading. So that is key. But they're saying exercise only happens about 7% of the time. And going back to the point of the gentleman at the rep at ETrade who said that it doesn't exercise on the short side, to keep things fair, the OCC does still have that procedure where options that are 0.01 cent in the money, 1 cent in the money, are going to be exercised and assigned unless contrary instructions are provided. And that's kind of an interesting statement there. An option holder, you do have the right to exercise your options regardless of the price of the underlying. Is a good practice to express their exercise or non-exercise instructions to their broker. Normally, though, as you saw, they would roll the position only 7% of the time do they exercise. Now, a little more on that. Let's take a look at TD Ameritrade. And I got this from this website here, tickertape.tdameritrade.com/trading/exercise, blah, blah. On assignment, an exercise of in-the-money option. It's automatic for the most part if an option is in the money by as little as 1 cent at expiration. It will automatically be exercised for the buyer and assigned to the seller. However, there is something called the do not exercise request that a long option holder can submit if they want to abandon an in-the-money option. In such case, it's possible that a short in-the-money position might not be assigned. Let's get a little bit more on that, going over to Tastyworks for just a little bit more clarity. The do not exercise request, if you have a long option that expires in the money, and do not want to exercise it automatically. So I have a long call that I let in the money, I didn't sell it, and it passed through expiration, I fell asleep at the wheel or something along those lines. I don't have the capital, or I don't want to put up the capital to buy the shares of stock. You need to provide them with a DNE request. Do not exercise request by 3:30 p.m. Central by 4:30 p.m. Eastern Time. It just disappears. It's abandoned. And if you're on the other side of that trade, Sal, you might not get assigned on that position. And they do make a disclaimer about after hours. The after hours price does not determine whether an option is no longer in or out of the money. If you're long an option that expires out of the money based on the last price, but due to after hours price action, it goes in the money, then you can still submit that do not exercise request. Or if I wanted to exercise it because it was out of the money, I thought I'd lost everything, but after hours it goes in the money, I can let them know by 4:30 p.m. Eastern, 3:30 Central, that I do want to exercise that option. And your in the money option would be assigned in that case, most likely. But if my option expires in the money as the buyer, of course, what they're talking about, but due to after hours price action, it goes out of the money, the long option will still auto exercise. You could still do the request for do not exercise in those cases. Now, how does this relate to Sal? Well, it relates to Sal in the sense that the other side of that could do the do not exercise request. And my conclusion is that Sal's rep at ETrade stating that options auto exercise is strictly on the long side, but not all is in or necessarily on the short. It's possible that a deep in the money short put, the position might in fact expire untriggered. I think he was referring to the rare times. I'm assuming it's rare. I can't imagine just abandoning an in the money option, not taking exercise. Yeah, if I missed it, I didn't get to sell to close it, but I didn't want to be short the stock by exercising my put or be long the stock by exercising my call. Maybe I just wipe it off the face of the earth with the do not exercise request. Maybe that was what he was referring to. I am not sure how often that happens, though. So if the do not exercise request is put in Pavel by the long option buyer that owns your January 2023 put all the way out at that time, of course, it is possible that the in the money sold put that you have or an in the money sold call might go unassigned. And it could also be related to the after hours comments that were referenced there at Tastyworks. I don't know how frequently this is, but yeah, I would not count on this as part of my trading plan to hope that my option deep in the money would go unassigned because the option, your put option buyer on the other side put in a DNE request. I wouldn't accept that. Investor is more likely to exercise a put that goes in the money than a call that goes in the money for the reasons that they mentioned. You know, some of those key points here from the OIC, option holders only exercise about 7% of the options. Majority of options exercise will happen closer to expiration. Options that are 1 cent in the money will be exercised as assigned unless the contrary instructions are given. And I don't know how rare that is, but still remember, only 7% of the options are exercised on the assigned side. Puts, of course, are the more commonly assigned. From TD, there's something called a do not exercise request. Long option holder can submit if they want to abandon an in the money option. And from Tastyworks, you need to provide the request. The other trader, in your case, Sal, would need to apply for that DNE request before 4:30 p.m. Eastern, 3:30 Central. Okay, so that's what I think your rep was talking about in those cases, is the DNE situation where an in the money option might go untriggered or unassigned. But by the OCC, any options that are 1 cent in the money will be exercised or assigned if the DNE is not put there by the option buyer, or of course it was closed or rolled or adjusted early in that case. All right, most of the time it's rolled or adjusted prior to expiration. Quick disclaimer, I've got to put this in there. This will be posted as an archive, of course. We'll host a video there, but I do not have direct permission for these direct excerpts from the OIC, TD Ameritrade, or Tastyworks. We're going to put the video up. I'm not going to put any, some of that monetary ads on it or anything, but it may have to be taken down if requested by those entities. Those pages that I showed when you review this presentation are all public pages that do not require a login to any of the websites, and they all appeared on a Google search, so I think it's fair game to use in the presentation, but I just wanted to make that quick disclaimer here regarding that as well. All right, so Sal, I hope that answers some of your question, gives you a little bit more clarity, and of course, you'll be able to review the presentation as we go forward.